Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Tuesday, March 24th, 2009. UK consumer prices rose 3.2% in annual terms in February, coming in much higher than expectations of a fall to 2.6%. It was an increase from January's 3% as well. On the month, prices were up 0.9%. The higher-than-expected result was led by higher food prices and a weak pound that made imports more costly. Bank of England Governor Mervyn King exchanged letters with the Chancellor of the Exchequer, Alistair Darling, and both seem to believe that February's data is a blip in a trend that points to lower consumer prices in the months ahead. The higher-than-expected inflation data boosted the pound against its key rivals. The pound-dollar pair broke above the 1.4625 level during the Asian session and climbed to as high as 1.4777 in European and New York trading. That's the highest the pair has been since February 10th. Back then, a pound rally stalled right before the 1.50 level. The pound-yen pair saw the same sharp jump to start Asian trading, primarily as a result of the after effects of the U.S. Treasury's plan to buy up toxic assets and the surge in U.S. stocks yesterday. Today's jump corresponded with a breakout from the 141.40 area, which had been resistance since the beginning of December. Today's level puts the pound at a 5-month high versus the yen. The euro also rose to a 5-month high against the yen today. The euro-pound pair fell for a fourth straight session, with today's gains for the pound accelerating the pace of the recent downfall. From a high near 0.9360, the pair slid all the way to 0.9160 in New York trading, a 200-pip drop. That level retests the lows from last week. In the Eurozone, both the manufacturing and services sectors contracted at a slightly slower pace in March compared to February, preliminary data showed today. It's still the 10th straight month that both sectors have contracted, though the figures did come in better than expected. The Eurozone, however, remains mired in recession, which has increased the number of job losses while lowering industrial production. The ECB has already cut rates to 1.5%, a record low, but policy members seem ready to continue their rate-cutting campaign as conditions worsen. The euro-dollar pair fell from its high to start the session near 1.3675 to settle low at 1.3475, a change of 200 pips. The pair is currently in a consolidation pattern following the pair's sharp climb last week, so traders should keep an eye on whether we move back upward within the channel or if we have a breakdown below the support line. In the U.S., home prices rose 1.7% on a seasonally adjusted basis from December to January, according to the Federal Housing Finance Agency's House Price Index. For the 12 months ending in January, prices fell 6.3%, which was an improvement on December's 8.2% decline. In a second release from the U.S., the Richmond Fed Index surprised forecasts by posting a negative 20 reading. That shows that manufacturing in the Central Atlantic region contracted at a less pronounced rate this month. Key sub-indexes, shipments, new orders, and employment moved up from record low levels, though they remained in negative territory. The dollar-yen pair climbed higher today as we saw the yen decline versus most of its rivals. Today's high was close to the level that the pair was at prior to the Fed's announcement last week. From a technical perspective, the rally stalled at the downward sloping line of resistance that has been set up in March. Stocks in the U.S. were generally down today, though they kept a good portion of the gains from yesterday's sharp rally. The weak performance in U.S. stocks further eroded any momentum from the greenback rally, and the dollar began giving up its gains in late New York trading. And a look at a final pair today, the U.S. dollar-Canadian dollar pair bounced up off the 1.22 level, which was support from last Thursday following the sharp declines in the pair in the wake of the Fed meeting last week. The loonie has been benefiting from the sense of risk appetite and rising oil prices recently, though today there was indecision with the greenback, though the greenback staged a late rally as a result of the decline in U.S. stocks in late New York trading. Tonight, Japan will post its trade balance, and New Zealand will release its consumer confidence data for the fourth quarter. Overnight, Germany will post its consumer confidence for April and its IFO Business Climate Index. The UK, meanwhile, will release its CBI Distributive Trade Survey, a measure of the retail sector. Tomorrow, we have two key releases from the U.S., durable goods orders and new home sales, which should offer some clues to how those two sectors are doing. And that wraps up today's action in the Forex markets. Thank you for joining us here at cmsfx.com, and we wish you success in your trading.